This is Aaron Levine, LG Insurance Agency, hanging out with my pal, Jason Melando, also from LG Insurance Agency. Yes, we're going to have a Who You Work With Matters podcast moment, but we're going to dive a little bit into some of what's going on in Jason's insurance field and his expertise for 2025. I want to dive into this VIP branding that I've got on my t-shirt right now because we have some fun stuff coming out this year that we want to be able to share. And it's going to be really beneficial to Jason and the people that he works with. But I think it's going to be super fun to take this back in time a little bit to a time in South Beach, Miami.
Wow, I remember that.
Gosh, the year was,
So random.
What year was that?
Shoot, it's definitely pre-COVID. So yeah, I would say it's about 8 years ago. 9 years ago.
Yeah. So, I mean, we're going back to 2015.
2015. Yeah.
We're going to call it South Beach, Miami. We
That's
didn't
about
know
right,
each
yeah.
other.
Yeah.
We were both on the same sales rewards trip through our MGA Zenith Marketing Group at the time, which is now Ash Brokerage,
Yep.
which is the hub that helps us place life insurance and disability and annuity business for our clients.
Yep. They're our central
Right.
back office.
They
Yeah,
help us
absolutely.
access over 100 different markets.
Yep.
They have experts that help us solve certain cases that we need help with, plus underwriting assistance and everything that goes into it to really make Jason shine with the work that he's doing with the life insurance, disability, financial products, and his other clients for personal lines and their business and risk management needs. But we were on this rewards trip and we were walking. I didn't have kids then, so it might have been before.
I remember we were at
2015.
the little mini bar before we went
I
to
think
some
Harry
museum.
was like 2.
Yeah, he was. We
Like-
bought him. Apparently, we didn't get the memo.
You
No
know,
kids.
They're like, who's this idiot bringing his kid?
I definitely
You
felt
know?
like that.
Harry was like 2. Harry was probably 2, and I don't think I had
Yeah,
any kids.
I think he was. Yeah.
Like, I think I was maybe just getting married. And then so we were just talking like, hey, what's your name? Where are you from? And then we get to New Jersey. I'm from New Jersey too. What about you? Monmouth Beach.
Beach.
Wait a minute. This is getting weird now. And
Very weird.
we had that moment that we lived around the corner from each other, but had never met one another.
For a
at
small
the
town,
time.
that's weird. Yeah, exactly.
So super cool moment. And, flash forward now, Jason has 2 wonderful boys. I've got 2
Thanks.
great girls. We've grown up a lot. We hang out a lot. And, I've seen Jason's business flourish tremendously over the last couple of years. And I think it's fantastic. But
Thanks, buddy.
I think it's fun. It's fun to have that little flashback
Yeah.
back to,
I forget it sometimes.
back to the Ritz-Carlton on South Beach.
Yeah. Fun trip. It was a good trip.
Those were good trips.
I remember the museum with the cars. Remember?
Museum with the cars.
All the
Batmobile,
Batmobile and stuff.
Flintstone
Yeah.
Mobile,
Yeah.
some really exotic stuff. I forget what the name of that car museum was, but that was a lot of fun down in
Good times.
Miami.
Yeah. Good times.
And then dinner with Derek, talking disability insurance and
Kills
all,
the mood
all
in a
that fun
second.
stuff. Derek, wherever you
Yeah,
are,
exactly.
I miss you. So Jason, let's go a little bit into your history of where you started in the financial services business, and then let's get into what you're focusing on now.
Yeah, thanks. First, thanks for having me. Appreciate it. Gosh, I started over 15 years ago now. Yeah, I got in, but funny enough, I got in at probably the worst time you can start, which is 2008, when the market completely crashed. I was in the asset world, wealth management, things like that. So that was even more interesting. Working with a lot of the larger insurance carriers, AXA, National Life, things like that. Progressed into more insurance. I've been finding out that just my book was just evolving into more and more risk management. And that's where I just essentially went on my own and just focused solely on that, living and working in New York. Met my wife, got married, and decided to have children. And we moved to New Jersey. Pier Village was our first stop, which was just a wonderland. It's like fun. And then we transitioned to business here. That's where I met you, and I guess the rest is history. Yeah,
and the rest is history. So as we transition into a new year right now, we had a very good 2024. Moving into what's next, what are you going to be focusing on for the next year?
Next year, what I really want to focus on, where I think there's a lack of attention, We were starting to make some headways this year, is in the income protection world.
Okay.
Everyone tends to think that their number one asset is a house, which usually is, right? Your number one hard asset, where you spend the most money, is your home. But what they tend to forget is that, what do you need to pay the mortgage, the water, the heat, and everything like that? You need income.
Right.
Now, if something happens and you get hurt, where are you going to get that income from? I like to be the one that reminds these individuals.
I say it often, I'm more expensive disabled or unable to produce income than I am dead.
Yeah, I'm just going through a new one now. So I'm building upon what I currently have. So I agree with you there. I feel like you can never have too much. Right.
But there's such a misnomer in the space that my employer is going to cover it or the state's going to cover it, right? There's going to be some way that I don't have to take responsibility for myself. And that's a more common conversation around life insurance when people have company purchased life insurance. But when you remind them it's an annually renewable contract, and when you're no longer employed with that company, whether it's by force, retirement, or otherwise, that insurance policy goes with it. And you may be uninsurable at that time, right? That's a very important conversation to have with people. But the same thing goes with that income protection. If you're no longer able to perform your job and you're no longer getting that paycheck, that state disability isn't getting you to where you might want to or need to be.
Not even close, especially if you're used to living a certain way.
Right.
If you have a certain lifestyle and you're used to that lifestyle, your workers' comp or whatever you're going to be getting disability from the state is not going to be anything close to where you should be able to get through a personal policy.
But when it comes to income protection, people are like, I have my advisor accounts, I have my stock accounts, I have my money. I don't need the insurance expense on top of that, right? How do you have that conversation?
Well, I just ask them, you have all these buckets of money, what are they designated for?
Right.
Nobody says I have a bucket of money designated for when I get hurt. Oh. It's usually I have a rainy day fund, or I have retirement, or I have a school account, or I have all these different things, but no one specifically has an account saying, oh, I have 100,000 sitting here. Oh, just in case I get hurt, I'm just going to make sure I'm going to pay my bills over the next couple of years.
The rainy day fund, 100,000 might be enough.
Oh no, it'll last
100,000 might not be enough for the if I get hurt fund.
Right. Exactly.
Right.
No one thinks, what's probably separates us being in the insurance industry is no one thinks catastrophically. Right. No one thinks, oh my gosh, I won't be able to work ever again. Right. And if you're young, that means having no income, say till age 65 when Medicare kicks in. Right. So that's what I try to instill, is a little bit of fear, saying, if you can't work, what are you going to do?
So every other insurance product that we sell, whether it's homeowners, auto, business, building insurance, there's either a bank, there's a law, right? Yeah. Or there's a landlord requiring insurance.
Yep.
Now, sometimes certain banks will require life insurance to purchase an asset, right? Especially if you're dealing with the SBA for a loan. They'll require life insurance. But we just did one recently for somebody purchasing a building and building out a business, and the requirement was very small, right? Mm-hmm. And it turned out we wrote a 5-year term life insurance policy where we basically did somebody a favor at our cost because the policy was so cheap. But that covered the requirement from the SBA, right? So it's not going to protect them. Probably if they die, the SBA is going to be made whole. Right. And in every other insurance scenario, the landlord, the lender is going to be made whole in a lot of those property scenarios. On the law side, it's a little different when it comes to liability requirements, although there's some new liability requirements plus some property requirements on certain assets for multifamily landlords to make sure that, properties can get put back together and cleaned up appropriately to be by using insurance funds. Sure. So there's more requirements on that on a legislative level that have been coming down in the last year or so. But the requirement for life insurance is usually not forced. So they always say that life insurance is a product that has to be sold. It's never bought.
Correct.
How do you feel about that?
Correct. It makes it tough for us, right? Because it's not something that's mandatory like a home insurance or this and that, like you just alluded to. It's something that people need to be educated on. That's the reason why we still have jobs, because not everyone's on the internet. There's not enough ads on the internet.
Right.
There's not enough ads on TV. There's not enough ads on radio.
Mm-hmm.
So there's not enough promotion
Right.
about this, either the life insurance or disability insurance, income protection. So it's up to us to be able to go out and advocate for it.
Right.
Right. Now that's not easy.
Mm-hmm.
But what I'm learning more and more, especially when it comes to the younger generations, they're starting to understand exactly why they need it.
Right.
Right. Maybe it's because their parents have it, which is good. You know, their parents got insurance. They're saying you need to have life insurance.
That comes into I hear that a lot in the long-term care conversation.
Yeah.
I learned about it because I experienced this, or I learned about it because my parents experienced this with their parents.
Right.
Right. It's skipping that generation. That younger generation is like, well, my parents better have this long-term care insurance.
Right,
so
exactly.
I get something when they die.
I got to protect my inheritance.
Right. That's what it comes down to.
That's not funny, because actually they think like that. They're like, wait, they're going to spend down how much per year?
Well, I
And
tell
I'm
my dad all the
expected
time.
to get this.
Like, Dad, I'm like, I don't care if you pay your life insurance premium. Like, just make sure that long-term care is paid.
Yeah.
That's the bill I want you to pay.
But no, it's funny now. You know who's buying the long-term care insurance? It's the children on the parents.
On the parents.
And they're paying the premium. So what I'm finding is more and more kids that either have gone through it or are going through it are like, shoot, I should have got my parents a policy.
Right.
And that's one way I bring it up during discussions, is like, okay, has your parents ever had to deal with something like this?
Mm-hmm.
And 9 out of 10, they say yes, especially if they tend to live a little longer. And the second thing is, well, what are you going to do if it perhaps happened to your parents?
Mm-hmm.
And then they say, well, I never thought about that. I was like, well, your parents are young. Why don't we run a couple scenarios and see what it looks like for you?
And so
And that sometimes they'll be like, I'll step up to the plate and do
the
it.
adult children are paying that bill to offset any future
Correct.
impact
Exactly.
to them, because there may be an expense that comes down the pike with respect to that if the assets are slow to be dissolved or sold, if there aren't enough with respect to that care, and there could be a tremendous impact on that. That's interesting. I never really thought about it that way.
Yeah, for them, it's you're trying to make it as easy as possible, especially when there's a death or a disability or long-term care event, because they're dealing with one thing,
Right.
grieving the injury or the parent that needs round-the-clock care.
Right.
They don't want to have to deal with everything else.
Right.
So that's where the life insurance comes in, the proceeds. That's where the disability income comes in. They don't have to sell anything. They don't have to fire sale a house or sell 401k funds and pay taxes on it and things like that. So that's kind of what brings to the table the insurance, especially on the tax favorability side.
It's interesting, and I think about it for myself that I don't want my kids to go through it, right? So I'm not thinking about my parents because I guess maybe
I don't want my
because
kids to take care of me.
thinking about it for my kids,
Right,
you know,
exactly.
I have daughters, so I think I'd be okay.
Right, fair enough.
You
yeah.
have sons,
Yeah,
you're
exactly.
You're
I'm
beat.
screwed.
You know, my parents have 2 sons and a daughter.
Right.
My daughter is the caretaker. My brother and I guess, are the financiers.
Yeah, you handle all that stuff.
But I think about it for my kids. I'm like, all right, what are they going to have to be responsible for when I'm in that decrepit state? Is that the right word? I don't know. Maybe
That's what the insurance comes in. That's, you don't want to be. What I hear it all the time. I don't want to be a burden.
Right.
Which is a terrible word, right? Because your kids don't think that. Well, they shouldn't anyway, or any other caregiver, family-wise. But they don't want to have that. So by having this insurance, the unfortunate part is it's pricing everyone out.
Right.
It's not cheap.
So what's the strategy then? How do you get around that pricing?
It's something better than nothing type of thing, right? The first question you ask yourself with that type of insurance is, what kind of care do you want? Right? Do you want to be at home? Do you foresee assisted living? No one ever says nursing home. Right. You never want to be there because that is the last stop, unfortunately.
Right.
But so that starts with that, and then you figure out, all right, what's the daily cost for that?
Right.
And then drill it down from there. All right, daily costs. How much can you subsidize? Take a look at your overall financial picture. It's $400 a day, for example, in New Jersey. On average, it's between $300 and $400 for a semi-private room, I think it is, or not even. How much can you subsidize with your current finances? Is it $200? Is it $300? It's a big decision to figure out.
But there's a lot of variables, which is, it's good and bad. One, you can create a plan
Yeah.
that works well for you. Same on the disability side, same on the life insurance side. You can really custom tailor this. That's why buying something on the internet is probably not a good idea, because there's a lot of decisions when it comes to any of these types of policies or any type of insurance policy in general. There's a lot of issues with certain things that buying them online. There's a reason, there's a place for it and a buyer for it. But if you care about what you're getting, you want to speak to an advisor, whether it's on your personal insurance, your financial insurance, or or your business insurance, because you don't know what gaps are being thrown at you. But is there layering certain products together, leveraging whole life insurance to offset some of that long-term care cost?
Sure.
Is one strategy, because then there's the
two
opportunity
birds, one stone right there, right? You get the life insurance and the long-term care tied in.
Because then if you die, you get a bigger life insurance payout.
Yeah, well, true. Yeah, exactly.
Right? Then you don't feel like you're just throwing the money away at that time.
No, it's not a use it or lose it type of thing.
Right.
Right. Which a lot of people do feel. They're like, why am I going to pay for this with the chance that I may never use it?
Right.
What's the advantage there? It's the same. Well, I just flip the script and say, oh, you have home insurance. You hope you never use it.
Right.
Right. But you have it.
Right.
Now, granted, the cost tends to be much less than the long-term care or life
typically
insurance,
also required by a lender or
correct.
some other,
exactly. Right.
some other power.
Yeah, some
I'd
people.
hate to see what this economy would look like. If people weren't required by their banks to buy certain insurances, what the F would go on out there? It would really either be be really harmonious,
right,
or it would be like next level,
like a Purge movie where just everyone's going crazy.
It's like, I don't have insurance and I just crashed into somebody.
Right.
Now what?
Yeah. They're like, oh, see you, I'm out later.
And then it's a sue me for what moment, because you probably have nothing anyway.
Right.
Right. But then it's like, then what the hell happens? Then what do you do? Like,
it's a good point. It's
my house burns down. I have no insurance because nobody made me buy insurance.
Right. All right.
Now what do I do?
It's like a check and balance type thing.
I'm going to start getting really political, so we're going to divert and not go.
Fair enough.
not go down that that rabbit hole of people saying, "Well, my house burned down, so I can use GoFundMe, or the government will subsidize me for something or other."
GoFundMe drives me crazy.
It does. GoFundMe is. I
feel terrible when I see GoFundMe when someone prematurely dies. It really is unfortunate that someone wasn't there to talk to these people and say, there's an easier way to do this. For pennies on the dollar, you can get quite a bit of insurance.
Problem is, it's too late to have that conversation with those people.
I know, that's what's unfortunate, exactly.
And everybody else is in a state of, it's not going to happen to me.
Well, yeah, everyone.
And then everybody wants to buy insurance when it's, when it's too late. Like, I grew up in a family where life insurance was important. I've had whole life. My children have whole life policies. I cashed out a whole life policy. I don't know if you ever knew this, in 2009 to help fund starting the agency.
Oh, no kidding.
So I had cash value. I had a nice policy put together that my dad bought for me 15 years prior, whatever it was. And we were funding. It was cheap. It was, I want to say it was like $100 a month. The premium was $100 a month. It was nothing.
But it adds up quick because when you're young.
Yeah.
The fees are low. Yeah.
But I had $20,000 sitting in this account that I was actually able to use for a good purpose.
It's exactly one of the reasons why you do it.
Like,
it's exactly what you do.
I love that as a tool. And then, God forbid something happened to me, there was that extra benefit for anybody that needed it. At that time, I had, no family of my own to support, but that was always there. Who cares where the benefit would go? But like, something so simple. Like, my kids are going to have that when they're 21.
Right.
They're going to have, I don't know, $25,000, $30,000. Not a lot of money.
That's a good point.
But it's just a little bit of money to just have in cash value. And I see it two ways, right? One, there's a little bit of cash.
Yeah.
They can spend it on something worthwhile.
It could be a wedding. It could be school help. Maybe she wants her own apartment or something. It could be anything like that.
You know, or something happens and your kid gets sick and they're uninsurable. Then you have life insurance that can stay forever because it's a whole life policy. Yeah. Or you just keep paying the premium and let it keep growing until
then they can buy a house.
Something else.
There's a down payment for a home.
Then you have a down payment for a house, or you have it.
I'm seeing that more and more.
Whatever.
A lot of juvenile policies.
Right.
I don't know if it's the parents or grandparents, but The younger generation is like, I want to get it on my kids. I want to get on my kids. Maybe it's more publications about it or something, but it's such a good strategy.
And it's easy.
Yeah, it's very easy. The premiums are
There's
not
no medical.
exorbitant. No.
There's nothing.
And it's a nice little pot of gold at the end of the rainbow when you decide to give it to your child, maybe when they're 25 or 30 or something like that. Yeah.
It's great. I think it's a very worthwhile strategy, and
I agree.
I deploy it for my own kids. I wish I actually bought them more.
It's a good way for also grandparents to gift the premiums and get some money out of the estate. It's another way to do that.
Ask my parents to pay for the premium.
If they're looking, hey, I need some help. You can gift it. Don't worry about it.
I need $50 a month per kid.
Exactly.
Let's go. But all right, so let's underwriting, right? So everyone's afraid of the underwriting and the process that we have to go through to get insurance policies, life insurance and disability policies issued. Now, the underwriting has changed significantly also. Things have gotten so much easier with AI,
to some degree,
with technology.
Correct,
like apps are going quick on life insurance for the most part. There are certain things that are going to take a little bit longer or require some manual underwriting. But you said to me the other day that the disability policies, too, are getting quicker and easier.
Everything. COVID, it's very few good things you can take from COVID. But that time really accelerated the technology with insurance carriers. They were way behind as far as automation, doing everything a little bit more in a streamless manner, less paper. Right. When COVID came around, no one wanted to go see anybody. Right. But they weren't allowed to by law, but depending on the state you're in. But so they got used. So now everything is an online application. You could do accelerated underwriting depending on certain parameters, and everything could take a few weeks to take care of depending on the person you're dealing with. Right. Where we come in is the cases that tend to be a little bit more difficult. Right. And this is where people tend to shy away from life insurance because they think they can't get it. And my thing is it's worth a try. Right. Because guidelines change all the time, depending on the what they have, as far as underlying disease or whatever. That being said, we can help walk them through that process. We just had a case that we thought was going to come in here. We got some medical history, and I'll give you another. And we were able to get the insurance. There was another one that Ash came in. That carrier came back with an offer. We gave it all to our underwriter, and we have an underwriter staff, which is great, through Ash Brokerage, medical director. She looked at it and reversed it and went back to the carrier and said, no, this is all incorrect. We see it this way, and the insurance got written.
That's awesome.
That was pretty brilliant. Yeah, I was pretty happy about that. Yeah.
Well, it's good to have the right people on your side, right? Like these are the who's in our lives that we rely on to say, hey, I need your help. Right. Can you put another set of eyes on this? Can you review this? We think it should be rated more favorably, and here's our case for that favorable rating, and that works, right? Having those good relationships with the carriers and putting enough business in with the brokerage is going to help us get to that better level, right? And be able to have those good moments come out. Those good outcomes. I love them.
Yeah, it's great to be able to get someone who didn't think they can get it.
Right.
The insurance. It's pretty nice to be able to do that.
I don't want to know what the premium was, but
well, that's the thing. I'm very upfront. I'm just like, well, if we do go through this, there's an expectation that the premium could go up due to circumstances that come up, either through medical records or interviews or whatever it may be. So we make sure we set expectations. It can go up and down quite a bit, depending on your medical history. So
so those are the relationships that you maintain with certain underwriters, with our team, and with your clients as well. And so I want to turn this conversation into whole nother direction. When you're working with people on the business side, on the personal side, you really handle it with kid gloves. Ron does the same thing. You guys have very good attention to detail when it comes to working with your people. And I've been noticing that. And, so we're pushing out an LG VIP set.
I was wondering what that was. All right.
Of services.
I thought I was a VIP. Sorry.
You are a VIP. You just don't get the swag shirt just yet. You get the door prize.
I get the mug with I write it on there.
You get the LG, the luxury group mug, and the Who You Work With Matters dual branding.
With a Sharpie, and I get the right VIP on it.
We'll write VIP on there with a purple. We got to get a purple Sharpie. I think that would look cool to go with the purple mug. And then you get the consolation prize of a WIWWM t-shirt. So
nice.
But the VIP services, right? very insured persons. Terrible.
Nice.
I know that's a bad one, but it's also very true.
It works, I guess.
And it's taking, really trying to take our services to another level, right? Really handle those higher value, higher net worth clients with a little bit more care and do a better job when it comes to themselves, their lifestyle, their businesses, and making sure that we've closed the gaps, identified any gaps, and really do the best we can do to be a part of their home office, to be a part of their family office, right?
Right, we're the insurance part of the family
being
office.
a piece
Exactly
of that
right,
family office when it comes to working with certain people. So there's actually a section on the new website that is a VIP section which caters to that. And then there's some more work internally that we're doing to get into this VIP set, which I'm very excited about for this coming year, to do a little bit more, offer a little bit more value add, a few additional services to try to help individuals and businesses as well, right? We want to do more risk management work, because you always use the risk management phrase when you're talking to and about your clients, that you're helping them with their risk management. You're not necessarily helping them with their insurance policies or buying insurance. You're helping them mitigate and reduce their risk
in every aspect.
And it's taking that into a VIP sense of, but we're going to bring tools to the table. We have claims management tools on the business side for certain businesses that are going to be put in place for workers' comp and liability. We have audit assistance that we're going to be using to help businesses when it comes to their workers' comp audits and their liability audits, to really take things to a whole nother level, to really have that concierge style service team helping those larger businesses and larger families get everything that they need to get. So
good call.
It's going to be super cool when we really dive into a little bit further into the VIP services in the middle of 2025. It's going to be
I think
neat.
it's a good idea. I think that's where agents are going to go, or have to go.
Right.
I mean, if you talk to enough people with the AI in the AI world, it's agents dealing with, the smaller type deals are all going to get automated at some point. But the VIP, to what you're alluding to, is where the agents are going to be needed, because a machine maybe can do it, but probably not. You still need that human interaction.
It's called QBI, quote bind issue. We have the QBI.
Exactly.
Capabilities on the website. But we also want to be able to help anybody that has a question personally, but then we want to be able to take it up a notch when it comes to the VIP client set.
Nice.
And really be able to help out, add value. And that's also going to, it's going to add profitability, and it's going to make things run a lot more smooth when it comes
but that's
to
what they want.
overall operations.
Those type of clients want that. They're used to that.
Right.
They expect that.
It's going to allow us
why
to
should insurance be different,
more.
right? Why should it be transactional? It doesn't have to be.
Right. We're going to be able to understand more and do more with our clients, as opposed to just being transactional.
It's being more advisors. That's what I keep telling. What separates you from everyone else is that we're more an advisor type role. We don't want to make it transactional. Otherwise, it's sorry, we'll see it renewal.
Right.
That doesn't make any sense. That's not a relationship with your client. Be an advisor. That's my background, was being an advisor, and I think that's where it should be. And it resonates with most people. Some people want the transaction. That's fine. All right, see you later. I'll see you in 12 months. type of thing.
And that's okay too.
Yeah, exactly.
Right. We need those clients,
of course,
and we need people that want to just click and buy, and that's all. And it's all okay.
I agree.
But we want to be able to have our processes in place to manage every single set, so that we can do it correctly.
Great idea.
And appropriately. All right. So give me what's one win that you want to see yourself have, or one goal for 2025?
Shoot. Wow, what a question. You should have told me this ahead of time.
There was no...
this is a great... I mean, you start thinking about 2025 now, right? I mean, you're wrapping up 2024, which has been a good year in a way where I was going and focusing a lot on the life and the disability side, and it's worked out really well. A lot of clients through those two avenues, which I'm very happy about, I think what I'd like to see moving forward is a way to build up even more referrals. I mean, they're coming in pretty good through multiple groups like LaTip and things like that. What I would like to focus on going into 2025 is continue to life and disability, but I really take enjoyment in commercial insurance. And I think with the Killing Commercial that you've got me introduced to and going to some of these sales trainings online and things like that, that piques my interest a lot because it really gets you to fully understand someone's risk management picture. And like you said, get to be something besides an insurance person, right? It's saying, oh, this door's off. Right. You should probably screw this back in or something. Something as simple as that. Or, you might want to put some tape here or something. Those are little things I've been reading about and learning from yourself.
Right.
I think I see that more in 2025 as far as where it goes industry-wise. I don't know. But I think that's where my interest is starting to lie. Maybe do a little bit more training in that.
Love it.
Yeah.
Sounds great.
The deals are few and far between, which is I'm fine with. But I mean,
plenty of deals out there. We
exactly.
Just have to go get them, and we'll put a little strategy behind some of your marketing efforts and be able to go after it. So, Jason, thanks for coming and hanging out with me on the camera today. We have some gold that we're going to be able to share, and I can't wait to get it out there.
Thank you. Appreciate it.